When we look at this is the daily chart of gold futures, you can see today gold hit new all-time highs. I believe gold is on the cusp of a big breakout and a big move. I do like when I'm trading gold because I am looking at getting into gold for a trade to catch this projected move to the upside, which let's just take a look at this projected upside. So using technical analysis and Fibonacci extensions, we can get a gauge of where the next upside moves for gold will be. And based on Fibonacci extension, it is showing us that we should go to $3,725, potentially all the way up to about $4,100. So there's about 18% upside from here.
As of August 8th, 2025, gold prices have surged to new record highs, with futures briefly exceeding $3,500 per ounce. This surge is attributed to several factors, including the U.S. imposition of tariffs on 1 kilogram and 100-ounce gold bars, which disrupted the global bullion market. Additionally, geopolitical tensions and expectations of Federal Reserve interest rate cuts have driven investors toward gold as a safe haven asset. Analysts are now forecasting that gold prices could reach $4,100 per ounce by the end of 2025. Chris Vermeulen, a well-renowned financial analyst, explains that gold has embarked on a remarkable upward trajectory in 2025, shattering price barriers and challenging long-held assumptions about traditional safe haven assets. As analysts project gold at $4,000, faith in the U.S. dollar tumbles to historic lows, creating a perfect storm for precious metals investors. It's certainly possible that gold prices hit $4,000 per ounce at some point, though it might take something big to make it happen, like the Federal Reserve dropping interest rates to zero, as it did during the COVID era. This might occur if inflation rises or a recession hits, and the Fed needs to stimulate consumer spending. We would need to rally an additional 17% from today's already historic price. That's no small feat, and at some point, the current rally will need to end. Gold never goes up in a straight line, so we need to expect some pullbacks along the way. Gold tends to bottom in August before rallying for 2 months, and it is currently at that turning point. This leadership from miners suggests physical gold could be just days away from starting a strong upward run. For further information, let's take a look at the video. Please give us a thumbs up and subscribe to our channel if you enjoy what you see.
When we look at this is the daily chart of gold futures, you can see today gold hit new all-time highs. I believe gold is on the cusp of a big breakout and a big move. I do like when I'm trading gold because I am looking at getting into gold for a trade to catch this projected move to the upside, which let's just take a look at this projected upside. So using technical analysis and Fibonacci extensions, we can get a gauge of where the next upside moves for gold will be. And based on Fibonacci extension, it is showing us that we should go to $3,725, potentially all the way up to about $4,100. So there's about 18% upside from here. Now, I'm excited about it, but I don't really want to get into it until gold breaks out to new highs. And you're going to say, well, it has broken to new all-time highs. Well, the way I like to follow gold is actually through regular trading hours, 9:30 to 4. That's when the majority of volume is traded. That's where price can't be manipulated as much. And because what we saw today was a spike up in gold as, London exchange opens and closes and pre-market and post-market. There's easy manipulation and movement. And so gold had that spike. The best way to look at it is to look at like an ETF, the PHYS, like the Sprott Money Management, the gold ETF. If we zoom in here, you'll notice if I draw a line across the highs here, we haven't really broken to new all-time highs yet. I want to see gold on a regular trading hours only chart break and close above here. And then I'll be like, okay, gold has now broken out. It's starting another run. This is going to be a significant one. And there's a few other things that are really juicing gold to go higher. We have one of the simple ways to look at it is just the seasonality. You and I have looked at this a few times, David, but here we are literally at the low where in August, like pretty much right now, where gold usually turns around and rips higher for 2 months. So we have now a tailwind behind gold, behind our bullish chart pattern. So that's a really bullish sign. And the other thing to look at are we've seen gold and silver miners. They have now broken out. They've already broken and started to run. And when we're in a very unique precious metals specific, like rich environment, like I feel like we just finally turned into that. Gold miners tend to lead the way, meaning gold miners will rally 3 to 7 days before physical gold breaks out. I've seen this so many times in the past. So the miners give us this warning, and now we're like, okay, now that we know it's about to run, gold should be the next one to follow suit. Because the smart, aggressive, savvy money who realize this market condition we're in, they moved into miners because they see gold going higher and they want to take a leverage play on it. And so that's why I really like gold. Is it's a day or two away potentially from breaking out and starting a significant run.
Several factors are keeping risk sentiment off, which benefits gold, hence the march toward $4,100, while S&P should continue lower next week. Gold continues to climb relentlessly, with the $3,100 milestone now within reach, fueled by a mix of economic uncertainty, inflation fears, and global trade tensions. The metal has gained nearly 200% since late 2022, consistently setting fresh record highs. With gold's momentum showing no signs of slowing, some analysts are now considering the possibility of $4,000 per ounce by the end of 2025, a target that seemed unlikely just a few months ago. This trend suggests that a significant market shift may be imminent. Gold's current price action, seasonal patterns, and relative strength indicate a potential 20% rally, while the stock market reveals signs of weakness beneath the surface. Such behavior often precedes an unforeseen event, the kind that triggers a sharp downturn and marks the beginning of the next bear market. While the exact timing is uncertain, the message is clear. Something significant is brewing, and investors should have a clear exit strategy ready before sentiment flips. Meanwhile, the dollar staged its best weekly performance in over 3 years, gaining around 2.7%, after Fed Chair Jerome Powell signaled resistance to a September rate cut, and a U.S.-Europe trade deal offered more clarity to markets. Despite the recent bounce, analysts remain bearish due to continued concerns over the Federal Reserve's independence, shaky data credibility, and expectations for multiple rate cuts this year. The dollar has fallen nearly 9% in 2025. Finally, let's review the interview.
When gold starts outperforming and running higher, especially in an environment where it feels everything is frothy, things feel out of control somewhat with equity pricing and what's going on with presidents and rates and all that stuff, gold tends to do really well. A good comparison is, and you and I have touched on this in the past, is if we take a look at this chart on the left. This is the S&P 500 in 2007. We saw the stock market make a high. It had a very big correction to the downside, and then it rebounded and made a nominal new high. Now, gold is the yellow line. Gold was outperforming. It was a top performer, even when stocks were hitting all-time highs. If we look to where we are right now, the stock market has done a similar. It had a big correction this year. It's rallied back. We're now making some nominal new highs. And gold is doing the same thing. It's outperforming. It's one of the best performing assets long-term at this moment. And gold is, when people get nervous, they're scared about stocks, they're scared about real estate, they're scared about currencies, they move to physical gold. They get out of the financial system and they buy a bunch of shiny gold pet rocks and silver rocks, right? That's telling us that people are fearful and that something bad is brewing. Now, if we look at 2007, as the stock market starts to sell down, the candlesticks, gold starts shooting higher. And gold ended up shooting almost 38% to the upside, while the stock market fell 20%. And we're very close to something similar. The gold daily chart pattern is pointing to a 20% move. Seasonality-wise lines up. The stock market is telling us that it's not very strong. It's still going higher, but it's not very strong. It's on the cusp of a big reset. So gold to me is that big barometer saying if gold is going up and outperforming, you got to be aware that some big bad news is lurking out there. We're going to have something hit the market, and we won't know until it hits, but it's going to turn the markets around and it's going to crash, and it'll probably be what the next bear market will be labeled after. So that's where that's where gold to me shines as that very big global trigger saying be aware. It might not happen yet, like now, it could be a couple months down the road still, but something big is brewing. And we just need to you have to have a game plan, because when things turn around, especially for the stock market, you better have an exit plan. So taking a look at the dollar index, obviously it's been beat up pretty hard, but it does feel like it's trying to reverse direction. We've had what I call an impulse move. So if we zoom into the chart, an impulse move is usually the sign that trend is reversing. An impulse move means you need to break through two resistance levels. So we have this first high right here, and then we have this other standout high right over here. And so when you have a move that is strong enough to bust through two resistance levels, it obviously has some momentum. And after that, you usually have a pause or pullback. It could settle back down into the mid-range or something. And then we should start to see it, work its way higher and start an uptrend. So I'm turning pretty bullish on the dollar because I think a lot of it has been worked out already. It feels like it's turned a corner and now it's just coming down to a reactionary low, and then it's going to have a reaction high and stair step its way back up. So that's what I see for the dollar. If we look at the 10-year note here, I mean, we're seeing it's holding its ground pretty good. It's got this big chart pattern. You and I kind of already covered this, but bonds are pulling back today about 0.5%. Let me just zoom in here. Bonds, I don't like. They're still in a bear market phase or a stage one basing pattern. We had the top back in COVID, broke down from a massive pattern, and now it's trying to find a bottom. So I'd be very leery. I think bonds could stay down here for a while. They could even go lower. It really depends on what happens with interest rates and how much trust people have in the United States and how much yield they want, like how much risk. As things become risky, the yields go up, which could be a reason why we see the yields moving in certain things. So there's definitely, I would steer clear of bonds. We're at this critical turning point. If gold shoots higher and the stock market rolls over, we're going to see everything go haywire for a while, and it's just going to be all over the place. So that's kind of the tipping point that we're at right now.
Geopolitical concerns, dollar weakness, and economic uncertainty have all combined to drive gold's historic rise toward approximately $4,100. Seasonal patterns and market indications suggest that there may be further upside potential. The future is not going to be easy, though, as investor patience may be put to the test before the year is out due to pullbacks and abrupt changes in attitude. What significant geopolitical or economic developments can hasten gold's ascent to about $4,100 by the end of 2025? How can the current positive trend in gold be affected by a rising dollar? Please share your thoughts in the comments section below. We'd be delighted to hear them. Don't forget to subscribe for more videos and give this one a thumbs up if you found it helpful. We appreciate you sharing in our adventure.